Today we are talking about what investors need to know about Nvidia's 10-for-1 stock split. Recent developments in the field of artificial intelligence have captivated the public imagination over the past year or so. A notable consequence of this trend has been the soaring stock prices of companies at the forefront of this technological paradigm shift. This phenomenon is most evident in the case of chipmaker Nvidia, whose graphics processing units, also known as GPUs, have become the gold standard for artificial intelligence. Nvidia's consistent execution and unparalleled business performance have driven its meteoric rise. Nvidia stock has surged 540% since early last year, propelled by triple-digit revenue and profit growth due to increasing demand for artificial intelligence. However, this is just the beginning. Since Nvidia's initial public offering in early 1999, the stock has skyrocketed from a split-adjusted price of 25 cents to over $939, representing staggering gains of 375,500%. On Wednesday, alongside the release of its quarterly results, Nvidia announced plans to split its stock for the first time since July 2020. The stock has increased more than 800% in the nearly 4 years since, likely prompting the split. This announcement has ignited a fresh wave of interest in an already highly followed stock. Let us delve into the mechanics of a stock split and its implications for investors. Nvidia announced that its board of directors had approved a 10-for-1 forward stock split. This will result from an amendment to the company's Restated Certificate of Incorporation, which Nvidia states will result in a proportionate increase of the number of shares of authorized common stock. As a result of this split, shareholders of record as of June 6, 2024 will receive 9 additional shares of stock for each share they own after the market closes on Friday, June 7th. The stock is expected to begin trading on a split-adjusted basis on June 10th. Nvidia investors will not need to take any steps to receive the additional shares. Brokerage firms and investment banks handle the specifics, with adjustments managed behind the scenes. The stock split shares will simply appear in investor accounts without further action necessary. The timing can vary from brokerage to brokerage, so investors should not worry if the newly issued shares are not immediately visible on June 7th, as it can take hours or, in some cases, days for the additional shares to appear. Adding numbers can illustrate how the stock split process unfolds. For each share of Nvidia stock a shareholder owns, currently trading at approximately $950 per share, post-split, investors will hold 10 shares worth $95 each. As the above example illustrates, the total value of ownership does not change based on the split alone, it is merely a different way of viewing the whole. In other words, if you buy a pizza, it does not matter if you cut it into 8 slices or 16 slices. The total amount of pizza remains the same. Similarly, Nvidia stockholders will simply have a greater number of lower-priced shares. Some believe that investor psychology will play a role, with excitement about the upcoming stock split potentially driving up the share price. It has also been suggested that the lower share price could increase demand for those shares among retail investors. Indeed, management notes in the announcement that the purpose of the split is to make stock ownership more accessible to employees and investors. While that is often the case, such temporary euphoria typically subsides, leaving investors to focus on what truly matters: the company's operational and financial performance, which will ultimately drive the stock price higher or lower. While the stock split alone is not a sufficient reason to buy Nvidia, there are numerous reasons the semiconductor specialist remains a strong investment. Investors need only look at the company's financial report for evidence supporting this view. In its fiscal 2025 quarter 1, Nvidia reported revenue that soared 262% year over year to a record $26 billion, marking an 18% quarter-over-quarter increase. This propelled adjusted earnings per share up 461% to $6.12. For context, analysts' consensus estimates anticipated revenue of $24.65 billion and earnings per share of $5.59, so Nvidia significantly surpassed expectations. If there was any doubt, robust demand for generative artificial intelligence drove record data center revenue of $22.6 billion, up 427% year over year and representing 87% of Nvidia's total sales. Another important announcement for shareholders is that Nvidia increased its quarterly dividend by 150% from 4 cents to 10 cents per share, or 1 cent on a post-split basis. The first increased dividend payment will be made on June 28th. Even at the new higher level, the yield will remain modest, amounting to just 0.4%. It is still very early in the artificial intelligence revolution, which adds to the optimism. The worldwide artificial intelligence market was valued at $2.4 trillion in 2023 and is expected to rise to $30.1 trillion with a compound annual growth rate of 32% by 2032, according to expert market research. As the gold standard for GPUs used in artificial intelligence, Nvidia is well positioned for future success. Investors should not buy shares solely because of the pending stock split. However, Nvidia's long track record of consistently strong operating and financial results, along with its substantial stock price gains, demonstrates why it continues to be a winning investment. Some investors might be concerned about Nvidia's valuation, but you get what you pay for. Despite 4 consecutive quarters of triple-digit revenue and earnings per share growth, Nvidia stock is selling for 37 times forward earnings. That is a small price to pay for such robust growth. That is why Nvidia stock remains a buy.